Hi, this is Paul from globaltradingsoftware.com, and this is a trading tutorial for swing trading stocks, in particular how to manage them using our manager indicator to help manage and maximize profits in there. So swing trading stocks is the cornerstone of my trading, and it has been for 2 decades now, and I share that with my inner circle. So these are the current open trades that I've got with the inner circle, with the entry prices, the stop loss, the target, the profit and loss. So we see here 420% profit times risk on the IRM. I will go through what that actually means when we look at a chart in a minute. But I just wanted to show you that patience with swing trading is very, very important. And especially when managing those. So we can use the Elliott wave indicator suite, which I use a lot. You can see only one trade is Elliott wave and Expert. You can see most of them are Elliott wave either on the weekly or the daily time frame. 1235% profit times risk there, so really good. But these have been, you see, some of these have been in May, entered in May, June, July, one in August. So this it takes time to build those swings, and then you need to hold on to maximize those profits. So this is, you know, when we're talking options, you need to be going out a year or 6 months or something like that, especially on the weekly time frame. Daily time frame, 6 months is probably enough. So if you're swing trading using options, you need to go out quite a way, especially in the current market conditions. Let's just move that screenshot off, and then we'll talk about some of the trades. So currently, so that's MDB. We'll talk about MDB. This has had a massive earnings reaction, which I was waiting for, to be honest. The previous earnings reactions got us into this trade, and now we are go. So the entry for this MDB was at 325.64. Okay, so I'm just going to put that in there. Okay, so there or thereabouts. So the previous earnings reaction was the trade that got us into this. So this was a fifth wave trade, and also looking for that reaction in earnings to kickstart that trade, if you like. And then this next earnings reaction has followed. You know, we've had, you know, every earnings for the last year or so have been good, positive news, and this continues. So it's given us a massive boost on this trade, which happens. You've got to be in it to win it, and you've got to recognise the main bullish trend, the pullback on the wave 4 on the Elliott wave, and that fifth wave move. That's what you do. That's my bread and butter, and that's what I do. But to manage this trade is very important using the manager. So great trade. We had a good move up. We used the manager to understand volume and price action behavior. So these little cyan circles above the candle indicate higher than average volume for that week. Okay, we had that the same for that week of earnings. So we got a really good impulse move up. We get quite a higher than average volume sell-off during this week in June, but then that runs out of juice. You see the lower than average volume blue dots now come back, and we test that entry, and then we start to move up again. Now we've just got to the top of the fifth wave target with that earnings reaction with higher than average volume. It's a green candle, so it's called an accumulation candle. There's more buyers in the market. Now a grey candle is not candle, okay, but lower than average volume, and it's lower volume than the previous candle week in this case. But this week, or the week's just closed, massive volume, closed, earnings reaction really helped. But we do expect, when we've had this big impulse move, there's a lower than average volume pullback. So we need to be able to ensure we can manage this trade sensibly, give it room to pull back and continue, because I'll show you why on the next example. So with the manager at the moment, it's set on swing trading. Now I've hit the fifth wave target. I want this to push through and continue. So it's over $500. It could continue. There's every likelihood that could go. So what I'm going to do on the manager, on the swing trading settings, I'm going to change that now to day trading conservative. And as we can see now, what it's done is adjusted this green cloud, and you can see it's above the original entry. So the thing to do right now is just make it risk-free. Put that, the stop, at the entry. Okay, we're now risk-free. And some of you say, well, what's the point? You've just, all that money, why didn't you take profit? Because with swing trading, these could run for quite a long time. you know, this bullish momentum, this bullish trend may not be over. This is an ideal situation where we have a fifth wave target zone, and that's what we look for. But you know, in 60 to 70% of the cases, if it pushes through, it comes back down to test this support, and this fifth wave turns into a third wave. So we need to give things a chance. You know, glass is half full type of attitude when you're swing trading stocks, not half empty, not just selling as soon as it hits a target zone, but giving it chance. So what I've done with this, I've made it risk free. I'm expecting a little bit of a pullback. It may push initially, and then it will come back again. I'm looking for a higher support than this one. I will then maybe even change this to day trading moderate, depending on where that pivot is, and adjust the stop and start to lock in profits. In theory, I could be in this swing trade for the rest of this year. I want to give it chance. We've had great earnings reactions. We've always had pullbacks against that earning reaction, some profit taking, which is natural for less sophisticated swing traders. They will press that button and they will sell at that profit. For those more sophisticated, they may just take parts of their positions off. But for me, at this moment in time, I've left all my position. I'm going to let it ride. Okay, so the next example is PKI. Now this one is an example where I'm just going to put that back on swing trading for a second. On the manager. So this one we've entered again, looking for that earnings reaction, because we've got, if we just zoom out a little bit, we've got a strong bullish trend. We've had a wave 3, we had a wave 4 pullback. All the criteria with the Elliott wave indicator suite set us up for a potential fifth wave move, and I was looking to get above this resistance and use the earnings reaction and momentum from that to get in this trade, and that's what happened. And that was back in May. Okay, back in May. So as soon as it hit this fifth wave target zone, I did not panic and sell, because we had accumulation candles. So each week had higher volume than the previous week, and the week of earnings we had higher than average volume pushing us through. This blue, this fifth wave target zone, is also a fib zone. So when we're looking for how to manage this, we see this move up, and then we pull back on lower than average volume, and then it starts to move up again. So we don't panic. But in this case now, I've switched to the daily time frame. Why? I use multiple time frame analysis. We have that pullback that we saw on that weekly was actually a wave 4 pullback, and it pulled back into the green zone. We then started to move back up, and we've just now tipped a fifth wave target zone on the daily. So what I've done now is, on the daily, I've gone to day trading moderate. Okay, that's conservative. If we go now to day trading moderate, change it. Okay, I can start to be more aggressive with this now. You see the cloud is still green, so we're still bullish bias. Friday's candle closed near the highs, higher than average volume with that cyan dot above. I've just got this previous wave 4 pivot here where my trailing stop is right now. So when we look on the 177.76, we look on the spreadsheet, that's where that trailing stop is there. It's in pink. Now when we open next week and we can get through this daily support and resistance zone, I will then start to adjust just underneath the cloud where the current candle is. You see the cloud on the manager is actually 4 candles in advance. It's looking into the future, if you like. But what I will do is this particular where it comes here on the, say, Monday's candle here, I'll be at 160% profit times risk locked in on this trade, on this 180.91, just underneath the cloud there. So I'm being sensible. It's all about being patient and using the manager to help you manage these trades. That's PKI. Now I'm going to go back to the weekly time frame for another swing trade I'm in. NVEE. Okay, so this one isn't really moving at the moment. We've had an earnings reaction which helped us get in. We've had another earnings reaction which rejected the highs, but then we've continued to go. So this is moving. We're on the weekly time frame. You know, the entry for this was back in June, 21st of June, the week of 21st of June. But now we've got to start to consider that this has taken a while. We see this pullback after the entry on lower than average volume, blue dots there. So that, you know, that downward, that selling just didn't have enough volume there, and then the earnings reaction started to move up. And each week after that earnings reaction, higher high, higher low, higher high, higher low, but still lower than average volume. Now what we've got to also consider when we're managing a trade is this previous wave 3. These are the previous highs, and this is where we're testing right now. So the likelihood is, because we're moving into this with lower than average volume, there's going to be another pullback. Now I've got a lot of trades on at the moment that are 300-400% profit times risk. So, you know, these are, I don't want to lose 100% times risk here. So what I want to do is adjust the trade manager now to day trading moderate. You see how the clouds adjusted, and now the entry is below the clouds. So I now make this risk free, because I've got lots of trades in lots of profit. I don't want to make a loss on this. I want to make it risk free, but I want to give it enough chance to push through this recent high here with this wave 3. Sometimes it fails and it pulls back. What I'm not interested in is actually losing any money and going through. So what I've done is changed to day trading moderate. So now my trading stop is below this bias cloud. And in fact, on the day trading moderate, if this does start to pull back, we'll see the cloud maybe even turn to red. If I can show you an example here, you see the cloud turn to red on this, and it was quite a big bearish move. So that's the right setting for this. And again, in the description for this video, you will find a link to the manager training. But this is part of that ongoing training that I'm trying to do here, to show you some examples on swing trades. And then finally, IRM. I'm going to put this back on swing trading for a second, on the manager. So this is a bit of a monster trade here. We're on the daily. So this is where we are on the daily right now. Again, I'm just going to put this back on the swing trading for now, and then talk through the trade. Okay, so another traditional type of trade with the 535, the stochastic, the wave 4 pullback comes to find support in the green zone here. Great looking trade, and this was an aggressive entry that I used for this particular trade, because this wave 4 pullback was very, very orderly. So when you use a regression trend channel, for example, which I use for sort of looking at how that wave 4 behaved, we can see here where the Pearson's R. You can't really see it that well. I'll just try and zoom in. The Pearson's R is 0.949, so 95%. So this was a very orderly profit-taking pullback. So I look for an aggressive entry out of here for my entry, and that's what I did on IRM. Now, what's happened with this since then is that we had this initial move up, we pulled back down, we didn't take the stop out, then we had the earnings reaction, higher than average volume, and that was the catalyst, if you like, to push us up. Then we had lower than average volume pullback. See, although we get red candles, which are distribution candles, there's more sellers in the market than there are buyers, it's still lower than average volume on these days coming down. This is where originally my trading stop was once we'd pushed up through this pivot here, because I was locking 100% profit times risk. But now we've gone and hit the 5th wave target zone, so I need to be more aggressive with that. So from swing trading setting on the manager, I'm going to day trading conservative. Okay, just taking my time. Now what we have is the cloud is above the 160% profit times risk. So what I'm doing is, with this fib zone being hit for the fifth wave target, we are giving this chance for a potential pullback before finding a higher pivot. And it may indeed, when we look at this support and resistance zone formed by the wave 3 and this previous pivot, that's the sort of zone we would expect the pullback to find support and for it to go again. I haven't got a crystal ball, but that's sensibly where we would find it. So by going to that day trading conservative setting on the manager, the cloud is above that 160%. I've moved my stop from this pivot now. I'm exposed a little bit, but I'm looking at this previous support and resistance zone. So one thing also which gives me a little bit of confidence in this is that 1, 2, 3, 4 days with higher than average volume pushing up into that fib zone, into that fifth wave target zone there. So the momentum last week was intense. Okay, we were achieving higher than average volume bullish days for pretty much all week. We had two green candles in there, which were accumulation candles, more buyers in the market than sellers. The grey candle was an up candle, higher than average volume, but we had roughly the same sort of buyers and sellers in the market there. And the cyan candle is when we gapped up, we rejected those lows on higher than average volume, but it's still close slightly lower. So still the momentum's there. It gives me more confidence to adjust that trailing stop now with a day trading conservative, because I need to be more aggressive with that to start to lock in more profits. I mean, this thing's at it's at 420% profit times risk. It's massive. So what does that mean? 420% profit times risk. So let me explain this. When I first go into one of these swing trades with the inner circle, or I share everything with them. So what happens is, if I look for an entry at 43.38, I buy a number of shares, for example, that if it comes back down through the stop and I sell those shares, I make a $10,000 loss. Okay, so my risk is $10,000. So it's not $10,000 worth of shares, it's a number of shares that actually tells me if I buy those shares at 43.38 and it comes back down through 41.88 and I sell those shares, I have a net loss of $10,000. So that's my risk. Okay, now this is where we get those profits through. So when we get to 1 to 1, that's worth $10,000 profit. We get 1 to 2, 20,000, 1 to 3, 30,000, 1 to 4, $40,000 profit. So what we're doing right now is we've got that trailing stop using the manager on day trading conservative, because we understand the behavior, the higher than average volume move up, the lower than average volume move down, and then we've had this big move up now, and we understand that we've got this support and resistance zone to the left here, which should, in fact, if this does pull back, should find support. So we're below there, we're using the manager, everything's good. Now this could hit 500%, this could hit $50,000 profit right here. It doesn't mean that I have to sell it. What it does mean is I can take part position off there. I've got options, but what I'm doing, and one of the main things I want to get across in this video, is that we're being sensible, we're being patient. When we're swing trading stocks, it's not just about hitting the profit target level and getting out and looking for another one, because in the market conditions right now, there isn't a great deal of trades, and you've got to do a lot of work to find them. And then when you're in one and it's working hard for you, you don't want, if it's an employee and it's working hard for you, you don't want to get rid of it just because it's made you a load of money. You just need to manage it sensibly, keep the expectations real, lock in some profits with this trade, and just keep going. So hopefully this helps, guys. It's the way I manage. The manager has been designed around my trading brain. So whether you're day trading on a 1 minute time frame, swing trading stocks on a daily or a weekly time frame, those settings are there, and that behavior and understanding that behavior with accumulation, distribution candles, higher than average volume, lower than average volume, and that cloud here where it looks at price action and things like that. This is how I manage trades, and this current batch of swing trades that we're in within a circle, 1,235% profit times risk. So it just goes to show that being patient and looking to hold those swings quite a long time, especially when the momentum's going with them, really does pay dividend. And again, you can have a real drought with this type of strategy, so it's not for everybody, but you can make hay when the sun shines, and that's all about when you're swing trading stocks. Hopefully this helps, and I'll speak to you all really soon.